in today's session, the Dow is hugging the flat line. The S&P is trading right around 2970. Joining us now, it is time for the closing countdown. We've got Kevin Hincks, senior equity strategist at TD Ameritrade. Kevin, what are you watching into this close right now?
Morgan, you know, it's late in the earnings season and the names are getting a little thin, but RH.com is a good one to watch after the bell. Why is that? Well, it's had a big run, as you just stated. It's up near its all-time highs. It's got a big expected move. The front month implied volatility, 121. That's implying about a $14 expected move. That's really close to 10%. It was $15 midday. It's backed off a little bit, but still percentage-wise for earnings, that's a pretty big expected move. From there, we go to macroeconomic data for the rest of the week. We've got PPI on Wednesday, CPI Thursday, and then retail sales, consumer sentiment on Friday. So once we get through some earnings one by one, we're going to go big data for the rest of the week.
Does the ECB matter, Kevin, for U.S. equities?
Absolutely, it does. I think that's a big, that's 7:45 Eastern time, right before we get our CPI data. So that's going to be a volatile morning for bond market for sure. I don't think they'll move rates, but they'll definitely probably announce more QE coming out of the Eurozone.
Kevin, the sell-off we've seen in tech and communication services stocks, how worried are you about that to the broader market?
Oh, you know, I think this is just what you're seeing here is one of those fascinating trading days where this rotation that you're seeing out of some overbought names into those beat up financials and banks. You know, Jamie Dimon just came out and said that trading revenues are going to be better for this quarter with the volatility that we've had. It's got to start showing up in the financials in terms of increased earnings revenue. So I think this is just a natural rotation. You see the 10-year back to 1.7. This is just, I think, some overbought areas just coming back into its normal balance.
You said trading revenue was going to be down 10%, albeit perhaps that was a little better than expected. Some constructive comments on the net interest income. Kevin, overall, the rotation that we've seen, which sector in terms of the clients you speak to is benefiting the most of all?
Well, I think the financials, obviously, if you look why the Russell is overachieving today, that's because they're so heavy into regional banks. And I think the regional banks, if you look on a heat map, they're really getting a lift here. And then it looks like people are rotating into just some regular industrials, right? Obviously, real estate and utilities are going to get hit as rates go up. But I think industrials and banks, both regional and big financials, really are having a good day today and seem to have a little leg here.